Welcome to the American Roundtable on Orlando's TV 38. I'm Al Spry. ART can be found on Facebook at facebook.com/USA Roundtable. That's facebook.com/USA Roundtable. So happy to have my friend and colleague Tammy Sheffield. Tammy, of course, is big in the broadcasting and real estate and mortgage businesses, and we're going to be talking about some trends happening across the country and here in our lovely state of Florida and Orlando. So kind of bringing you a big picture of what's going on in real estate and real estate financing. Of course, with the tighter markets around the country, we're going to be able to give you some useful solutions on getting that first-time home or finding that bigger place that you're looking for, or downsizing after the kids leave for school. So Tammy, welcome to American Roundtable. How are you doing today?
I am doing wonderful, Al. Thanks for having me. It's nice to be doing a topic that I have so many decades in, and I've also been having the privilege of working with Al in the real estate market, so I'm getting a little bit of both sides. I've been in the mortgage finance part for 31, almost 32 years. Went through, felt out the whole dust bowl that we had. And it's nice to see a little bit of the guidelines opening up again, because we were so tightly restricted right after the bust that people couldn't get financing. And it really brought down, the American dream kind of became an unreachable goal. So it's nice that we're able to get back there again. And I also think the sellers are benefiting greatly from today's market. How about you, Al?
I like being a realtor in Central Florida. You can find out more about me at alspry.com. Of course, I'm relatively new to the real estate industry, but I'm having a good time in it. I think that there's some excitement that's happening here in Central Florida and in Orlando that I think is also being replicated elsewhere around the country. But I think the low interest rates have a big reason, I think, of this.
Well,
right?
definitely. The interest rates have actually been in the 3s to maybe 5% range for about the last 3.5 to 4 years. And I've always said I expect an increase to happen. But right now, the market being like it is, first time a buyer comes in and looks at a property, he's going to have several other competitors right there next to him. So it's nice that the real estate market, being as busy it is, also has the lower interest rates, which you don't typically see. Whenever we have this much business and this much contract writing and different things going on with the sales of homes, we usually see a higher interest rate market. So I think that we're going to have a lot more homeowners in the United States because of this.
And I think another reason we're going to have a lot more homeowners, we'll get into this a little bit more in the show, is because rents are going sky high.
Oh, definitely. You can probably get into a home for, I'm going to say, about 25% less if you purchase than if you rent.
I've even seen in this market 50% less.
Oh, I believe that. Well, Orlando is a very, highly competitive market, so you're going to see rents go off the table. I mean, it's almost like New York, San Francisco, when it comes to rentals, because we have a lot of transients, a lot of people come into the Central Florida area not really ready to purchase. They don't know exactly where they want to be. They don't understand, the trends and the different neighborhoods that we have here. So rental is a very big first-time experience for these people, and the landlords are taking full advantage of that.
Tammy Sheffield, we're going to have some more fun conversations on this show, and always glad to have you on. This is American Roundtable. American Roundtable is brought to you by alspry.com, Realtor at Large. And, of course, check me out. American Roundtable will be right back after this. Welcome back to the American Roundtable on Orlando's TV 38. I'm Al Spry. We love this show. We love bringing you interesting guests. Of course, Tammy Sheffield is one such interesting guest. You have seen the ups and downs and all arounds in the mortgage and real estate industries. How would you rate the current market as compared to markets in the past?
I actually think it's probably the best I've seen in my 31 years history of this Orlando market, because of the fact we have the low interest rates, we have the decent inventory. The prices are still pretty good. I mean, I see a little bit of an increase. I think things are going to continue that way. But I believe in all of the years that I have been in this industry, and especially in the Central Florida market, that this is probably number one.
Wow, those are some positive words. Again, besides the interest rates you talked about last time, what do you think are some other reasons why you're seeing things
Because
going well?
I think people are more educated going into purchasing a home now because of what happened with all the fraud in mortgages and with the, the huge bubble that we experienced, not just here in Central Florida, but in all of the big metropolitan areas across the United States. So people got very nervous, gun shy about even going into the purchase market. And now that they have had the opportunity to get educated, they've gone in and checked out, their own profiles. So they walk into this transaction with their crap together. They've got their finances together. They've got their assets sorted out. They pretty much know what type of property they're looking for and where they want to live. And of course, the big selling point to most transactions is the mortgage financing. And most real estate agents won't even give you a showing until you present to them your pre-approval. So people walking into the door with all of those things before they even call the real estate agent definitely makes it a better market, not just for them, but also for the real estate agents. How about you, Al? You're being new to the real estate market. How do you think your buyers are coming to you?
My buyers are coming to me through a variety of ways, but now more often through the online services like Zillow and Trulia, and also calling because they see listings. Mm-hmm. And it's really much more of a partnership because your buyers, like you said, more educated, and they're going to see even properties sometimes before they, or at the same time they pop up for me, but they might be looking at them more often. And as you know, when you're a real estate agent, you can kind of get involved in multiple transactions, and sometimes you have to kind of do one of these where you're kind of here and there and all around trying to get everything done, right? So you're getting a much more astute and a much more, which I like. I mean, I like my buyers to be educated. I like my buyers to come in with ideas about what they want because it makes it easier for me. I'll find out easier what they want.
Terrific. Yeah, because it's hard. That's a very emotional purchase. I don't think that a lot of people understand how emotional. But it's almost like going into a relationship when you purchase a home, especially if you haven't done it either in a few years or ever before. Al and I recently worked with a first-time home buyer on a property that was an REO, which is very common in our market. An REO is basically a real estate-owned property. What that means is that the property was foreclosed upon or given up as a deed in lieu. The people couldn't make their payments.
Deed in lieu?
Yes.
What is that?
The difference in a foreclosure and a deed in lieu, really on a credit standpoint, there is no difference, but the true foreclosure is when the bank steps in and forces ownership away from the current homeowner. Whereas a deed in lieu is the current homeowner agrees to and signs a document that is basically deeding the property to the mortgage company in lieu of having them foreclose. But when the tarnish comes on your credit report, it's looked at the same by the mortgage lenders. So the best thing you can get out of a deed in lieu versus a foreclosure is you're going to save yourself a lot of costs legally. Because when you get foreclosed upon, you are responsible for all of the legal fees, everything that has to be done to move that property ownership from your name to the bank's name. When you do a deed in lieu, you're doing it voluntarily, so they're going to save a lot of legal fees, and therefore your bulk of money that you're going to owe, or the amount that comes off the equity that you may or may not have in your property, is going to be greater for you.
That's some interesting information. In the next segment, we'll kind of go through the buying process, of course, seeing how that's changed even over the last few years. We'll also be talking more about the real estate market in general. This is the American Roundtable. We're always bringing you something fresh and new every weekend, and we really appreciate your support of the show. Find out more about ART at facebook.com/USA Roundtable. That's facebook.com/USA Roundtable. Welcome back to the American Roundtable. Tammy Sheffield is my special guest. She's a mortgage professional. Also, she assists me with real estate transactions. And I just wanted to have you on because you have a passion for this type of work. Why is that?
I have always wanted to help people become homeowners. That is definitely something from day one. I started working in a credit union on Paris Island, South Carolina. And I was working with military families. And, they're usually pretty well put together financially. They don't maybe have a lot of savings, but the beautiful part for veterans is you have that 100% financing through the VA loans. But it's just something that I've always enjoyed doing, and I've worked with a lot of first-time home buyers, mostly in the Central Florida market, getting down payment assistance, which most lenders won't even touch. And I have to tell you the reason why is because you consider you're working with a local government entity. We're not talking state typically, we're talking county. And it seems the more centralized the government entity is, the more they don't have their crap together, for lack of a better way to put it. So you're dealing with a lot of time delays, you're dealing with a lot of guidelines and restrictions that don't necessarily make a whole lot of sense. And it's a difficult task to take on as a mortgage professional. And I took it on, just like riding a bull, because that's the way I am from Oklahoma. So you got to get up there and just pull on the reins. But I got probably at least 24 people into properties for very little, zero, if not, they got a little money back out of their security deposit. I had one lady that I helped to get into a property in a very nice area here at Altamont Springs. She got about 60% financing. So she literally has almost half of her equity there before she walked in the door because of her down payment assistance. And that type of mortgage is typically forgiven within 10 to 20 years of ownership. There are restrictions on the the resale of the property, and there are restrictions that you cannot rent the property.
Right. You have to live there, right?
Yeah, you have to live in it, and if you do sell it, there is sometimes a recapture clause where they take back a portion of the money that they gave you. But there's just so many benefits to getting into that if you're willing to deal with the red tape.
There's red tape. I remember I did a down payment assistance program when I bought my home, and you have to submit a lot of stuff. There's a lot of paperwork, but if you can get through all that, it can definitely help you when it comes down to the cha-ching part.
Definitely. I mean, you've got money to put furniture in your home and buy your appliances and, do all of those niceties that you wouldn't typically be able to do. I mean, a lot of people, the down payment taps them out. They're like getting all their friends and family to move them because they can't even really get the professional movers. And so this kind of gives you, a really nice home when you walk in instead of we got to do a lot to make this what we want it to be.
Right. It gives you a little more, buying power.
Yes. And there are also some really great programs like some of the local banks. I don't know if you want to, tout the Trustco, but, they've got an excellent program for first-time home buyers. It's 100% financing, no mortgage insurance. And these are the kind of things that I like to bring to people because they don't know they're out there and they don't necessarily have the opportunity or the time to go knocking on every mortgage lender and bank's door. So if you're really a professional and you want to sell and you want to do good for people, I highly recommend the mortgage industry.
Sure, and I like to recommend working with a realtor. You like working with realtors. Why is that?
Well, because you need someone that's going to handle that side of the transaction. I've worked on we call them FSBOs, for sale by owners. And as a mortgage professional, you also have a lot to do with inspections, with getting the utilities and things of that nature turned on because your seller is just not usually so savvy. And it's nice to have a professional. You definitely need to work with a realtor, not a real estate agent, but a realtor. Someone who has taken the time and the investment in themselves to become a part of that wonderful national affiliation that gives them so many tools and so much education to bring you a professional product.
I think I agree. When I became a realtor, there's certain ethics training and additional training that you have to do from just the state test that you have to take to become an agent. So, and I think there's other reasons not to for sale by owner. We'll get into some of those in the next segment. But check out our Facebook page at American Roundtable, which is where we talk about all kinds of stuff. American Roundtable, Facebook.com/USA Roundtable. That's Facebook.com/USA Roundtable. We also have a YouTube page at American Round Space Table. So it's American Round Table. I'm Al Spry along with Tammy Sheffield. We're going to have some other thoughts about this fascinating topic right after this. Welcome back to the American Roundtable. More about American Roundtable at USA Roundtable on Facebook, Facebook.com/USA Roundtable. We're on Orlando's TV 38. I would love for you to check out my site at alspry.com. You can find out more about what I do as a realtor, alspry.com. Tammy is here with me. Tammy and I have, in addition to doing some work together, we've done some radio shows in the past, and we are working together again. It's always appreciated, Tammy.
Yeah, it's when we're together, magic happens. And it's a beautiful opportunity for me to get in front of a camera. So I get a little bit more comfortable with myself and with the speaking easy and all that sort of thing. But I believe we're going to do some magic here today.
Magic.
This is our last opportunity right here We got about 7 minutes of magic production to go.
Yes. So what's up with refinancing? Is that more difficult to do now than it used to be for refinancing your house when you purchased that house?
Well, actually, all loans are a little bit more difficult because of the fact that the guidelines have been, pulled in. There is not so well. The old loans that you used to do with the no income, no asset verification are very limited in what you can get away with, and I don't mean it in a bad way. But if you can't bring 2 years of tax returns, 2 to 3 months worth of bank statements that have all legitimate situations, not a lot of large deposits because you got to prove where the money comes from. Tax returns don't write off all of your income because then you won't qualify for your mortgage payment. There's a lot of things now. The loans are basically audited as they're processed. So before you even go to the closing table, pay the last bit of money that you owe, and get your keys to your house, every document that you provided to your mortgage lender has been audited. It has been reviewed. So there is not going to be any back-end issues calling the note because of a fraudulent situation, because it's going to be caught before you ever get that house. So that makes it a little bit harder on the refi side, because a lot of times in the past, people were able to just roll on their equity. So if you owned a property and you didn't have very much of a balance on your mortgage, you didn't have to prove your income. You didn't really need to show a lot of assets because your asset was your house. Now you still have to show all of those items regardless of the loan to value, which is basically the difference between the loan amount you're getting and the value of your property. And on a refinance, to keep it in no mortgage insurance and just a little bit less restrictive pricing, the best deal is going to be an 80% loan to value, which is 80% of the value of your property will be the loan amount. And anything 80% or below, you have no mortgage insurance. But once again, as I said, you have to go and prove your income. You have to prove your assets. Your credit rating has to match the requirements of any home buyer. So you're not getting any advantage by already owning a home and having equity in it. And I think that's been very disappointing for a lot of homeowners, because that was kind of like their ATM. We all know that terrible syndrome.
Of course, that's what it shouldn't be, right?
Well, yeah, because you don't want to put a consumer debt on your homestead. So you have a bunch of credit card bills and you're like, oh gosh, I can get these paid off. My payments will kind of basically go away because my mortgage payment's going to be the same that it was, and then I have no more, Visa, MasterCard, Sears, or Sears is even gone, JCPenney, whatever. The department store cards can all get rolled into the mortgage, but the problem is that's your home. So if something goes wrong, you've got $10,000-$20,000 more to pay off on your home. To me, a consumer debt needs to stay a consumer debt. It does not need to be collateralized, and you should never attach it to your mortgage.
Because you can lose your home that way.
Absolutely.
And if you keep it not attached, you can just declare bankruptcy
Yeah.
and keep your home.
Yeah, and if you're in a declining market, which we all experienced back in 2006 to 2000 and probably 10 to 12, then what happens is you are just like you are when you buy a new car. You're backwards. So you owe more on your home than it could possibly be worth. And all of that is because you rolled all those credit cards into it.
Did a lot of people do that?
A lot of people lost their homes literally for that reason. So it's like the horrible ATM mortgage.
But I see that's happened. That trend seems to be coming back, because I see one gentleman who's doing commercials in Orlando for a mortgage company. I won't say which one, but showing pictures of like a pool and a motorcycle. Like, you should be using your home equity for these vanity purchases, and I don't think that's a very good idea.
Yeah, and the thing about the pool, that's a really
Pool's
great.
okay.
No, but I'm glad that you brought it up, because there's something that people need to understand about a pool and a home. The best way to do it is buy a home with a pool.
Already has a pool.
Absolutely.
It's a depreciating
It is
asset.
ridiculous.
What you put in, you're not going to get back out.
Right. So if you own your home, you want to put a pool in, I used to tell people, sell that house and let's go find you a house with a pool. Because you're going to put a $20,000 pool in there.
$30,000, $40,000.
And the next day, it's going to be worth about 15 to maybe not even that much
10.
In your home value.
Right.
So where's that other $15,000 you just paid to put that gorgeous pool in the backyard? You can't even afford to put a screen over it now. So, it is kind of interesting. So it depends on what you're going to do. I mean, if you're going to rehabilitate your property, there's some great financing. There's a refinance loan through 203 or through FHA. It's a 203K.
And the two best areas to do that in are the kitchen and the bathrooms. That's your best
Well, they're
money
the most
for that.
pricey to rehab,
But
so that's why.
But that's the two things that people look at first
Yeah.
when they go look at a home to purchase.
Definitely.
They look at the kitchen
Definitely.
and the bathroom.
Well, there's 4 points to an inspection of a home to determine whether it's sound and whether it's been kept up to date, and that is the electrical, heating and air conditioning, roof, and plumbing. So anytime you're messing with those items, you know you're going to get a pretty good value dollar for dollar for what you're putting into it. So if you're doing that, I think it's a good idea to maybe refinance. If you want to put in a new roof, you want to put an addition, you need to replumb. I mean, we all know that here in Florida, we are the lightning capital of the world in Central Florida. And lightning will do some really awful things to your pipes. It will make little tiny pinholes in them. And then all of a sudden you have water coming up through your flooring. Yeah. So there's a lot of opportunities to use your home equity to improve your property, but you don't want to do anything that's not going to be of value to your home. And a motorcycle sitting out front might look really pretty, but it's definitely not going to add value.
I would keep the motorcycle in the garage, but that's a whole different show.
Well, yeah.
How is it to work with me as a realtor? What do you think of my realtor skills?
I love it. I think it's very exciting. I like the freshness of working with you because I've worked with real estate agents for 31 years. And some of them really kind of need to find a new profession. They've just gotten old and grouchy, and they don't really have the happy, let me help you get a house. They're more like, oh, I gotta like show your property today. So the freshness of working with you, Al, and also you have such a professional quality about you. You know, everything that you do, you know, you have lots of good notes. You have, you know, as soon as you get on the phone with a customer, you're grabbing your piece of paper to write down all of the parameters. You know, together we're helping to establish some nice databases and different ways so that we can market our customers, because most real estate agents, especially new ones, don't understand that you are doing something where if you don't get back with that person, you lose them.
All right, that's it. We're out of time. Find out more about me at alspry.com, ALSPRY.com. Remember to keep it real and keep it tough.